Welcome back to the Future Show here on the Schwab Network. Happy Friday to you. And, well, let's bring in our next guest. We've got Alan Nuckman joining us. He's the Chief Market Strategist at BullseyeOption.com. Alan, good to have you with us this Friday morning. A little bit of an odd situation as we head into the cash open. Just talk to us about kind of what you're seeing in terms of some of these outages and the disruption.
All right, I'm going to apologize for saying it, but I'm going to have to be the one. Turn those machines back on. We all know that phrase. And we've got expiration Friday, so that people have to come in and play that game. So, we're seeing, things hold kind of steady, and everybody's sorting it all out here this morning. But, we've done this before, and there have been delays, and, the markets keep doing what they're doing.
Yeah. For those who don't know, that turn the machines back on used to be the old floor mantra, right? Back in the day as we were transitioning from the pits to the E-mini and the electronic platform. The other one I'm reminded of, what would they say? Open outcry will never die. Ultimately, it did.
It's from Trading Places. It's that's the reason I'm in this business is because of that
movie. That's where that originally came from. That's right. That's right.
So there are a lot of fallacies. There's a lot of futures fallacies in that. In that movie that we can discuss sometime. There's 5 incorrect inefficiencies of how the markets work. But it did introduce people to capitalism and understand that there's opportunity in any market, anytime, any direction.
Yeah, I never forget going to see that movie with my dad. He absolutely loved it. Okay, let's get into markets here and some of the opportunity we're seeing there because I wanted to talk first and foremost about gold. We've been kind of focusing quite a bit this week on the indices as they've sort of kind of passed the baton from one to the next into these new historic levels. Gold's kind of taken a bit of a backseat role, but yet, again, reaching all-time highs as well.
Right. All-time highs, and you're seeing some profit taking, and you could also attribute that to a lot of what's happened in the in the stock markets as rotation and profit taking. There's a lot of unrealized profit, and you know how the human mind works. You know how greed works. At some point, it has to be realized, otherwise it can evaporate. And so people will trail their stop losses up to protect their positions. Then when the market sells off, it hits stop losses, people exit, and then it hits more stop losses, so it can kind of snowball. So, it's important to see how things react, is how they react, not how they act. So when you get a big unwind in anything, you need to see what happens in the next few sessions to see if the new buyers step in or if this continues.
So, okay, I like that. I mean, don't jump and act immediately, right? Take that step back and kind of digest the information and ultimately distance yourself from the tick for tick, I think is important, right? But so basically what you're saying is, kind of tying into some of the selling, it sounds like you think this could just be a longer term buy opportunity that feeds into that notion you've been discussing for a while now in terms of this commodity super cycle. You think gold kind of in that full-fledged in that mode?
Yeah, well, first thing I'm going to say that unless somebody got into gold last week or got into the NASDAQ last week, they're making money. Yeah. They're making money, okay? So nobody's losing money unless you got in at the top, which is hard to do, and good luck to you.
Yeah.
So it's about the long-term vision. It's about having the discipline. Markets can go a lot further than what you think. So let's see what this pullback is. Let's see what this profit taking is. But again, the key is about the dollar, and that's what you were kind of alluding to, is the dollar went below 104, and that gave these markets a lot of support. But what was interesting was that gold made new all-time highs, but silver didn't even really. I mean, it got a little bit close.
And you know what? Copper. Yeah.
Right. And copper's
been selling off.
Copper's been selling off. So you're not getting that benefit from the weaker dollar that those other metals should have. So
well, that's why I wonder if it was more tied to some of the geopolitical tensions, this Taiwan narrative that we came into on, I think it was Wednesday morning. I mean, there's been, it's not just the CrowdStrike Microsoft disruption this morning. I mean, this has been a kind of an interesting week for markets, and the political kind of scene has sort of taken a whole new sort of light ultimately, and even uncertainties about the Biden administration and will this, campaign make it through the weekend?
Ben, we can't go straight up at this angle forever. It just doesn't work that way. You know how markets work. So there has to be, it's not my job to predict it. Right. Well, that and just understand after such just extended moves, that's how markets operate.
Yeah.
So, you want to be selling into strength and take advantage of it. And you can always buy back. And if it keeps going without you, guess what? You still made money.
Yeah.
I do want to talk about a couple things.
Real quick, I like the idea of selling some of it into strength, right? You don't necessarily want to unload all of your position, because then you can still make money being wrong, which, oftentimes as traders we are. So I think that's it's good when you can do that, right?
I have a mantra taped on my wall, and you probably should too. Sell too soon. All right? Sell too soon.
Yeah.
Those are good words to live by.
Nothing wrong with taking profits on the way up.
You still made money. This is not gambling. This is not Texas Hold'em. This is probability and repeat. You want to be able to repeat the process over and over again with a high level of probability. So that's what this is about. Okay, let's talk about the increase in volatility. Well, volatility has been between 20 and 10 since that last little volatility spike, however many months ago, okay? So the midpoint is 15.
Okay.
And
so let's see where we
are. We're just got above that. Let's see where we are by the end of the week. We've seen this for years and years and years, and we're in a long-term downtrend like this in volatility in the VIX, where we've seen this where it pops up and gets slammed right back down. Whack-a-mole. Every single time, it's a whack-a-mole. So let's see where we stand. But as an old trader like you, Ben, before they had the VIX, we used to have to look at treasuries. And treasuries are actually down. People aren't running into treasuries. People aren't scrambling. Treasuries have got nothing. They have no bid. So that's what we used to look at when we were kids, is there was no VIX to measure the fear. You could look into treasuries, and if people weren't running to the safety of treasuries, then everything seems to be okay.
Okay, we would also look to the yen, Alan. Now, rallying for different reasons here. Right, so again, but that's just my point in some ways, is those two traditional safe haven type tendencies that we would look to sort of gauge when that fear factor was starting to get to elevated levels, it doesn't exist anymore. So maybe gold again is that new gauge.
The yen idea doesn't exist anymore, but the idea of stocks and bonds is still intact. That, if stocks go down, people want to put their money into safety, and that's easy to do now with click of a button. You get your 5%. So, that can happen very quickly, very fast if people are feeling fear. Let me say one thing before, we change subjects again. We want to talk about this rotation, okay? People think this is a bad thing. We've been asking for the markets to rotate out of those big tech stocks. This is a good thing. These are more stocks are participating. It's rotation. So the Dow had been terrible in comparison to the S&P and the NASDAQ. And
now
the
it's
Russell,
improving. Yeah.
Right. And the Russell had been not even a player. Right. Not even a player. It traded sideways in a 200-point range. The Russell traded sideways for 7 months.
So we're finally getting what we wish for.
You get what you wish for. It's not a bad thing. Take yes for an answer. Yes, we are in an everything bull market. Take yes for an answer.
Alan, I always say Kevin Hinks is the most glass half full guy I know in this industry. You're second in line by far.
You called me second twice.
Nah.
I don't know what it's going to take. I'm going to have to send you some of my old tapes. And this is not a new trick for me. We've been in a 50-year bull market. In our lifetime, Ben, we've had two pullbacks. We had 2008, and it took a year to bounce back. And then we had, COVID, and, that took a little bit to bounce back. But, I think we're in 2010 all over again. That's what I think. Well, there's nothing holding back the market. There's nothing to hold them back.
The guys know in the office, know that I always say that the old saying I took away from the trading floor was Praz, one of the bigger traders in the S&P pit. I think it was. He used to say, hey, this market was built to just go higher, generate wealth, just buy this thing, simply put. It's
that
pretty
easy
simple.
Sometimes.
Yeah.
It's that easy sometimes.
Well, we make it a little bit more complicated, that's for sure.
Don't think thinking gets you in trouble.
I appreciate you joining us here. Crazy Friday morning. Alan helping us kind of calm things down a little bit. Alan Nuckman from bullseyeoption.com. Let's bring